Good morning, everybody. How's everyone doing today? Apologize for jumping in a little bit late here. Hi, Miles. Glad you can hear me okay. All right, so let's focus on what's going on here with the Dowie Mini, the YM. Currently flat, but could have a setup coming up, possibly a long trade here in a moment, or maybe even a short. Down nearly 400 points this morning. Good morning, John, Arizona Bob, Pamela. There's a long heads up. 33,322. Stopped at 33,282. Not sure if it's done testing those lows there, but it's targeting 33,356, 374, etc. You can see it in the panel there, but we're looking for 352 as the money management level. Let's blow up this. This could happen rather quickly. It just has to get through that 50 moving average. And soybeans. Let's get to soybeans. Waiting for the first trade on soybeans. We'll go ahead and review everything else in a little while. Hope you guys had a nice weekend. It's been pretty busy for me. Hey, Steve. Hey, Jeff. So upper right corner, that's what we're looking at. There is a possible short on soybeans, 14.14, the entry. And a short on the pound Aussie. If anyone's day trading that pair still at 71.09. 71.09. It did trigger in. Now we have a long on soybeans. Heads up. 14.18. Not sure I want to go 2 ticks. Could adjust above that swing level if you want to give up a half a point. 14.18. It actually did just hit 14.18, so maybe now you do want to make an adjustment if you didn't place that order yet. Looks like it could push through. We'll see. Anyway, targeting 14.20 and 3/4. It stops at 14.13 and 3/4. And the Dowie Mini could not get through that 50 moving average, and barely holding on. It just stopped out. This market wants to head lower. And soybeans could not punch through that swing level. Looking like an adjustment would have been a good idea. You can see it just stopped out. Too bad. Now we have a short again, this time at 14.13 and a half. We'll go below the entry since it already hit the entry. Make that 1 tick adjustment below. Tough call when you have to make a half point adjustment on a 1/4 point tick. It's a kind of a large percentage of an adjustment, but it certainly would have saved that trade there. It's a good example of why we make adjustments and what happens if you don't. Sometimes it's good to pay a little extra and get that extra price action confirmation and make sure it's going to force its way through. So soybeans is now short right there. Let's open this up a bit so we can see it. It's targeting 14.10 and a quarter, 14.08 and a quarter, 06 and a quarter. Stops at 14.18 and 3/4. Good morning to you, John W. It's a good sized trade here on soybeans. If it can get to that first target, stops will move to break even. And you guys probably know this already, but since I didn't see you last week, energy futures are on the October contract, the V contract. Look at crude oil trading in the 80s. And the YM looking to get long again. We'll adjust that a little bit up to go to 03, 33,303. Stops at 274 and targeting 316, 326, 336, 346. Not a very big trade, but let's at least make it push up to 03. Get over that 20 SMA. Soybeans pushing closer to its target. There it is. So soybeans just pushed through target 1, and it just hit target 2 as well. And stops need to move down. 14.12 and 3/4 is the stop. The YM still flat. The entry at 303 keeping us on the sideline, but it looks like it might push through here. Let's see if it can. And now, 14.12 and a quarter, the stop on soybeans. Already hitting targets 1 and 2. And you could see the adjustment on that long trade. 2 ticks, that's what I don't like about the quarter point tick markets, because every tick is a larger percentage of the overall trade, but that would have been a wise adjustment. Obviously, in hindsight, you could see why. 14.12, actually the stop just moved lower, 14.11 and a quarter. The Dowie Mini still flat. And target 3 inside on soybeans. There, Dowie Mini's long. Money management is at 314. Not a large trade. Good morning, Johnny Seattle. Soybeans pushing through the 200 moving average, and the stop moved lower. 410 and a quarter. If anyone in that trade, put your stop at 1410. 1410 and a quarter. Have to wait for another trade on the pound Aussie as well. That one getting short and then quickly stopping out. So for those of you who are new and don't really know maybe what you're looking at, the lower right-hand corner is a soybeans chart. It's the November contract. Soybeans just stopped out, by the way. The stop moved down to 14.09 and 3/4. If you were still at 14.10 and a quarter, you're still in the trade. You may want to push the stop, or you could mark it out even. The trade should be over. Anyway, that's Counterpunch Trader on the lower right-hand corner with soybeans. The upper right corner is Spotlight Master Suite, and having its not the most attractive looking chart here to start trading this morning. Is it bottoming out? Is it not bottoming out? It keeps pushing to new lows and then failing to follow through, but we haven't really seen any strength to the upside either. And that is 3 attempts. Well, one didn't trigger in, but 3 long trades in a row. The fourth one is usually the high odds. That's usually the one that has the best chance of winning. So we'll see if we get another long trade. But this market may just want to be, I mean, who knows? It could be a down day where the longs just aren't going to work. But you never know. It's still too early. Still, it's making new swing lows here. So not the best start to the YM, and certainly not the most attractive looking chart. This is what we've been contending with this morning. It's pretty ugly. No real follow through to the downside. Certainly it's unable to get through the resistance of that 50 moving average. This short trade here would have been a good trade, but the proximity was not, the exhaustion was a little too far off the line. So no trade there. And I don't even know if it went far enough. Let's see if it would have. I don't think so. Probably good we didn't get in that trade. Well, it would have got to target 1. Would have been like perfect at target 1. But it just didn't happen because of the inputs that we use. The proximity of the exhaustion was too far away from that 50 moving average. All right, maybe a 4th time's a charm. We're going to put that up at 33. We'll go 33.316. Let's get it. See if it could punch through the 50 moving average at least. There it is. All right, so hopefully it's got some legs this time. The failure to get lower without follow through could lead to a strong move higher. This is the 4th reversal in a row, and that usually has pretty good odds. So it's long. Money management, 33.341. It's already getting close to that. And that's targeting 345, 364, 383, and 402 with a stop at 33.267 down here. Again, this is Spotlight Master Suite, you guys. So if you're used to Counterpunch Trader, you'll know some of the elements of this strategy. You still have your exhaustion levels. You still have your balance or signal line and the confirming price action with the setups. But what makes these setups is different than what creates the setups in Counterpunch. So we'll keep an eye on that one. Let's mark our money management level. Did not quite get there. Now hopefully resistance becomes support and it bounces off the 50 moving average and gives us another leg higher. It's just not the personality of the morning so far. You could see that every attempt to get higher has led to breaking to new lows and then back up into the middle again. It's been real crappy. It's like expanding range is always treacherous when you get these funnel forming formations here. This typically is what losing trades are going to look like, is when you get this kind of price action. It is what it is. It happens sometimes. Good morning to you, Neil. Hi, Andrew. Andrew, that's Counterpunch Trader for soybeans. It's been like the same one for years and years and years. And that's Spotlight Master Suite on the YM. But you could try. I mean, I think Counterpunch does fine on the YM. I mean, it used to. I haven't looked at it in a while. I'm kind of suffering from being the victim of too much creation. I just can't possibly follow everything. Okay, yeah, I'm just looking at the chat there. So I didn't know when you came in. So the YM now with the stop and reverse. This will be the last. You should be out of the long trade. I mean, you have a choice. You could stay with the long trade, but really, this is indicative of, garbage price action. Stopped and reversed a little bit below the entry. You should be flat, and the session is over. We're going to take our lumps. That's a, yeah. Need I say more? What happened on crude oil? Let's take a look. Brand new in the October contract here. Just rolled over since last week. Does not look pretty. I'm already looking at this. Well, let's see. Well, lots of action here. I mean, this was a little bit too early. I mean, that's really the trade you want. Was there time to get it? I don't know. It doesn't look like it. Looks like it went too fast to me. That's too bad because that was a winner. So, not the world's greatest session today. We have that green trade losing and then flat, but then the blue trade losing. So that's it. Mini session done. Spotlight unable to pick up the shorts because of, again, the proximity of the exhaustion just wasn't there. And so all attempts to get long on what is so far a down day are not working. That doesn't mean they won't. Like, look at this one. This one worked really great. But how many? Here's the thing is when you get to that fourth long trade, and maybe this is even the fifth, but usually when you get to that fourth, the odds go way up. There's 1, 2, even though it didn't trigger in. 3. You could see the legs going down still have energy. 4, 5. The energy going down is waning. The 6th long trade is the one that wins. Then the 7th. Already now, usually you're counting those reversals when the market's heading lower. So the 4th one is when the odds go up, but not today. Took 6 reversals to finally get that long trade to work. So difficult session on multiple markets. And this certainly isn't attractive. You don't want to be in the market when you get this kind of pattern. It's pretty crappy. A lot of noise this morning. And the fact that crude oil now firmly living below 90 a barrel, down $3.50, almost 4%. I don't know about you, but I want it to go down. And then unleaded gas. This one also starts at 9. And this one, really great short trade, of course, but it was 12 minutes too soon. Then you got this short here, which is not bad. It just went too fast. So sometimes that's going to happen. And the long trade, plenty of time for that one, and that one wins. So the long trade gives you a minimal winner, 45 ticks to target 1, and then break even. And so finally a session that gave you a one and done result. You stuck with it. And then you could see not so bad here if you kept trading. You have a long trade that flips over just a few pennies below or a few ticks below the entry, and then a really fast moving short. And actually too fast because probably untradeable there. So it's good to get out of the market with power of quitting when you can. One and done. Because otherwise you're kind of in this long trade with no way to get short, and you're losing more than you should on the long and not benefiting from the move down. So trading could be treacherous, obviously, but power of quitting saves us from a lot of that, which is why it's so important. And that is another trade now on the pound Aussie, long at 7131, adjusting up a little bit above the dime, above the 30. So I don't know. I don't think anyone in here is really day trading Forex. This is still a good market to day trade if you wanted to. It still works really well, but it is slow. Can be slow, I should say. Feel free to ask any questions that you have. We can go ahead and review some other markets also. This is Counterpunch with the Russell. The Russell's down 31 points. So right here near the open, looks like there was probably enough time to execute on it. I wasn't really watching it, but you got over, almost 30 seconds. I don't know how fast it went through the entry. This is where if you're testing and you want to make sure that this trade should count, you could pull up a smaller chart, a faster chart, pull up a 15-second chart perhaps, or a 30-second chart. And the way you do that, this is what I really love about TradeStation, why I like TradeStation charts is one of the many reasons. But I can mark my entry, my stop, and then I could copy the chart. First, you want to make note of the timestamp, 8:31, right? So 8:31 and 4 seconds. So copy the chart, paste the chart. It'll paste it with those horizontal lines, and then change it to a 15-second or 30-second chart. And then you can assess if you had time to get into that trade or not. And this is really important because when you're testing and trying to prove a method of trading, a trade plan, you don't want to count trades that are untradeable, but you do want to count it if it is tradable, so you can get accurate, measurable results and prove to yourself if a plan is going to make you money over time. So we can go to the 8:30 and 4 seconds, and you could see, well, was it 8:31? It was 8:31, wasn't it? Let's double check. I already forgot. 8:31 and 9 seconds. So we could find that on the 15-second chart. So there's 8:31. Here's the stop. Here's the entry. And here we are at 8:30 and 30 seconds. So this is 8:30 and 45 seconds, 8:31, 8:31 and 15 seconds, and then it even stabs down and hits the entry after that, right? Because this bar closes at 8:31 and 30 seconds. So that gives us enough time. You could tell you have enough time if you're set up properly, trading on your chart or with the matrix or the dome or whatever, to hit that entry right there. You have enough time to execute on that trade. And that's how you check. You could even drop it down to a faster chart. You could look at a 10-second chart if you have to. But you could double check like that. See what happened first, what happened second. Did you have enough time? You get used to it. It doesn't take you very long to double check that. So then, let's say this is a trade you're looking at, I don't know, 8 weeks ago or whatever, some random session. You want to know if it was a winner or loser, putting it in your UTA spreadsheet. You could look at that and say, it did stab through that entry with enough time to execute on that trade. So now you know that was a winner. Missed target 4 by like 1 tick. One and done. See? Any questions on that? It's a nice little technique you could do. I can email you. I have a question on Counterpunch side. It says there's a screenshot of the calculator settings below. Settings aren't there. Hey, Andrew, you know what? Rather than put me through all that, why don't you just ask me what you're looking for, and let's just pull it up now. Okay. Let's do that. Five tick momentum bar, right? Or a 5-tick range bar in NinjaTrader. I forget what you're using. So this is pretty much doesn't matter. It's the same settings. It's a 5-tick range bar. So this is pretty much this should be 1 because it's hybrid mode. So, I mean, take a screenshot. Let me know when you have it. And then I'll scroll down to the next one. It's the same inputs, the same everything that you'll find on Ninja. Same order. All right, so then the next one. I mean, really, it's pretty much default settings. The only thing you're going to want to make sure you do is turn off the stop and reverse adjustment and make sure your minimum ticks for money management, for break even, and for trailing is set to 6. Like we usually use 10 for like crude oil and the YM and the Russell, most of the E-minis. But for the quarter point tick chart like this, we use 6. All right, so then the next one, I don't know if there's anything to really change on it. I think it's just all default. Everything's set to true. And then we do not use key level adjustments. So you turn those off. But everything else should be default. There's nothing really else, nothing really different that you have to change. It's target and stop default. It's all default. That's in the top part. Stop is 2. Entry is 2. Targets are 1, 1.5, and 2. That's it. And I probably turned off. Here's the thing. If you understand what hybrid mode means, like I think I turned it off on purpose because one thing we do with this is you have to know what hybrid mode means and not have the calculator do it for you. So that's why I set it to false. And the reason why is because if I'm not in a trade and the first trade of the morning sets up, I'm not going to filter it out with hybrid mode from the prior trade. I'm only going to use that if I'm in a trade. And what hybrid mode says is if you're in a trade, don't stop and reverse unless the trend mode indicator agrees with the stop and reversal. And some of you may just say, you know what, I don't even like that filter, and that's fine. It's kind of optional. We've always used it, but, filters are a double-edged sword, and you can do your own testing and decide if you like that. Basically, what that says is, let's say you're in a long trade. I mean, this is filtered out because of the squeeze zone filter, but let's say you're in the long trade, and then you get the short trade setup. You wouldn't take it unless this trend mode indicator is red and agrees with the reversing setup. Okay, that's what trend mode, hybrid mode is all about. In this case, it wouldn't matter because it already hit targets and would have stopped out with its trailing stop. So it's not a true stop and reversal. But if it were, hybrid mode keeps you in the original trade. Now, it could be that this is blue, and then on the third bar over, it turns red, and you could still hit the entry. And it has to be red, not to the left, but to the right, because it's based on the bar closing. But let's say right in this bar here, it turns red, and it's still at the entry. then that trade becomes valid and you stop and reverse. So there's a little bit of a nuance. You kind of learn it once you get to that point. It's questionable whether hybrid mode improves the plan or not. It's something I have not looked at in a very long time. And ultimately, I think it's kind of 6 over here, half a dozen over there. Because sometimes you employ an idea like that and it works really well, and other times it doesn't. And if you look at a large enough sample set, you find out that both worked, just a little differently. So whether you do it or not, it's fine. I always do it out of habit with this trade plan, but it's kind of rare that you see it. Like, you don't often see a stop and reverse and then have to worry about the trend mode indicator, although it could happen. Don, the 8, okay, so you weren't in here. So the question was, are you talking about this one? I don't see an 831. But this is a counterpunch trade, right? So you see a setup here, if this is what you're talking about, the white trade. And it's not quite the setup, because the white trade requires one additional piece of confirmation, right? Your high trend. The fast trend on the slower time frame is what this histogram represents. And to confirm the white trade, you need the cyan line to cross over the yellow line. That's part of the confirmation process. And when that happens, then you get the setup, and you see it because you got the targets. But the bar already closed above. And then it hit target 1, which is where we would move our stop to break even if we were in the trade. And so you would have to cancel that setup. It pulls back down and doesn't hit the entry anyway, but if it did, it wouldn't be valid. Because remember, when a trade hits money management and you're going to move the stop, the setup is canceled. So this is like one of those get in sync type of deals. And the white trade has that unique criteria that it uses the histogram as part of its confirmation process, whereas the green and the purple trades don't use the histogram. It's only, it's a unique rule for confirming the white trade, because the white trade is the counterpunch trade. It's based on the set of exhaustion dots that's lower than the 2 prior. And so in order to confirm that it's has higher odds for being a reversal setup, it needs more information. And the information that it uses is the fast trend on a chart that's approximately 5 times slower. So if this is a 5-tick momentum bar, this represents a fast trend on a 25-tick momentum bar. You see? All right, Pamela, have a great day. This is old stuff, because this all came out like when the counterpunch came out close to 10 years ago. So if you're trading the counterpunch, you should know this stuff, because this is real basic. This is like the first thing you learn, and it might be a good idea to review it, because everything is based on confirmation, price action confirmation. The green trade doesn't need it. The green trade is based on the dots, the exhaustion, in relationship to one set to the left. And if it's equal to or lower than the one set to the left, that's enough to give you a green trade, right? The purple trade has to be above one set to the left, but lower than 2 sets to the left. That is based on a higher swing level concept. So like looking at this purple trade here, you can see it's lower than the first one, but higher than the second one. So it's in between for the long trade. That's how the purple works. But the white trade doesn't have that luxury, because it stands alone. It's higher than everything else. to go down or lower than everything else to go up. So it needs something else to confirm its validity. And that's where we use the fast trend on the slower chart. That's the extra confirmation for the counterpunch trade, the white trade. So to answer your question, that's a note. That's not a trade at all. It's just not it almost was, but wasn't. This white trade almost was too. For a different reason, never triggered in, canceled. The green trade, like I talked about, I hate making a 2-tick adjustment on a quarter-point tick. It's like a half a point, but that would have been the wise thing to do in this case. It would have saved a loser. So, you have to make a decision when you're trade planning if you're going to make those 2-tick adjustments on soybeans or not. Sometimes it'll serve you well, other times it won't, and you really need a large sample set to really determine if it's worth it or not. And again, I'm kind of like in the camp that either method, either adjusting, I mean, it's a larger trade, so maybe 2 ticks you could justify it because there's plenty of target room above. If it was a smaller trade, you don't do it, but a larger trade, probably a good idea. But it all boils down to what you test over a period of time. And I think, again, it's 6 over here, half a dozen over there. Sometimes it'll work, sometimes it won't. And I don't know if there's a right or wrong answer. There's just whatever you choose, just do it consistently every time the same way so that you can really learn and get measurable results. And I'm referring to whether you make a 2-tick adjustment around a swing level or not. 1 tick, wouldn't even think about it. 2 ticks, maybe you do it sometimes if the trade's large enough, but definitely requires a little bit of thinking unless you have a rule that just tells you what to do, and that's ultimately where you want to be when you're trading a trade plan. Any questions about that? I know I'm talking kind of fast. Maybe some of it's going over some of your heads, which is normal. If you need me to explain it further, just ask. And then we did not look yet at some of our MQs, MNQs. So the custom Ranko on Catapult, and I usually recommend waiting that 4 minutes. This would have been a nice one, but it kind of went too fast. This one here, waiting the 4 minutes. Kind of a slow market. Not a lot of as much price action as we've seen, but this one here got to a nice target 1. Usually with this trade plan, you're going to take profits at targets 2, 3, or 4. But in this case, target 1 was a pretty nice risk-reward ratio. It was better than 1-to-1. So that would have been a break-even trade. But then the second trade, pretty darn good, hitting a nice target 2 anyway. That's 1.84. Risk $1 to make $1.84. That's pretty good. Almost got to target 3. So that one's going to be one and done. You guys see that? And this is with Catapult, but it could also be traded with Counterpunch, and some people do trade it with Counterpunch. That's why I have the Counterpunch dots, but it's not got the counter. I'm using the Catapult targeting, but if you wanted to see a Counterpunch target, I'll just show you really quick. It would have looked like this. So it would have hit target 1 here, and it would have not quite gotten to target 2, which is roughly where target 3 is on Catapult. But it still would have been a nice profit zone, and the stop would have moved not exactly like this. It would have followed a different line, but it still would have stopped out with a profit somewhere in that area. So MNQ kicked butt. Well, not if you're trading in the pre-market. Our buddy Chiffon, who's got a pretty cool trade plan, has been posting his results every day in Trade Hacking Club. It's really interesting. You may have seen the video I did with him a few weeks back with his equity curve and the power of compounding and all that. And he's just going through it every day. He's posting his winners and his losers, and it was kind of a crappy session in the pre-market this morning. It happens. The thing you got to remember is the winners come. So you go through some garbage sometimes, and then the great trades come pouring back in. You just have to have that belief in your plan in order to still be standing to pick up those winners when they come flying in. And they will. Yeah, he puts it in the Trade Hacking Club. Every morning he's been posting his trades. He's been showing his chart with the arrows and then a little comment, either won or lost, or power of quitting, whatever. Today he had a partial loss, a break-even trade, and a partial loss. So it wasn't horrible, but it was a losing session. Well, for him, he has his own custom plan, Don, where he starts a couple hours early. So his thing's different because he has to work full time. So he can't trade during market hours. He created a plan with Counterpunch Trader and the MNQ and the custom Renko chart that works for him a couple hours before the market opens. And it's not a bad plan. You know, it's as much as one can hope for during those hours. It makes enough to grow with power of compounding, and he's seen that. This particular one we're looking at is kind of anecdotal. I haven't put any pen to paper. I haven't spent time with the UTA. I'd love to. That's kind of wishful thinking right now with all the stuff I'm doing. I don't have time. But we watch it in the trade room every day. And if it piques your interest, you guys can figure it out. Ultimately, wait 4 minutes and then look to take trades. That was the assumption with this plan. Is that a good idea? Seems like it. I mean, just like every time we look at it, it tends to end up power of quitting after 1 to 3 or 4 trades. So, you know, if it looks like a duck, walks like a duck, quacks like a duck, it's probably not an aardvark. Probably a duck. So looking at this in the trade room and covering it and seeing it win, like every time we look at it, it's what it looks like. So to me, that kind of passes the sniff test, and maybe it's worth spending time with the UTA and really figuring it out. Yeah, so if your Discord has disappeared, I don't know why, because I certainly didn't do it. And tastes like a duck. Well, I love duck. Yeah, Steve, just open up, download Discord and click on the join the Trade Hacking Club link. And if that doesn't work, it should. I mean, I could look into it. You could send me your Discord handle. Let me see if I could find you on there. And maybe you need to just talk to support at Discord and get them to tell you why. They're pretty good. I'll be right back, you guys. Yeah, Steve, I'm not sure how that could have happened, but again, if you want to send me your Discord handle, I'll definitely look for it, and we'll see if we can figure it out. I know maybe one other person that's happened to, who's I don't even know. I just couldn't tell you, but their support team's really good, and we'll definitely get it figured out. See if we can get you back in there. Anyone have any more questions? John Lizar, I'm not sure if you're getting my Slack messages. I haven't heard from you in a while and just want to make sure you're getting them. I think it is Steve. Yeah, don't give it to me here, Steve. You just email me, please. Troy@backpacktrader.com. And give me your number, like Steve hashtag number. Oh, I'm sorry to hear that, John. I was worried about you. That's the thing. You usually are pretty snappy at answering. I'm like, I wonder what's up with John. I didn't know if you were traveling or what, but yeah, I had a flu a few weeks back, right when I returned from South America. My son had it, didn't know. Hey, Dad, gave me a hug. That's all it took. At least it wasn't COVID. Soybean plan, one and done, win or lose. Well, soybean, oh, you're talking about if you should do a one and done. I mean, there are variations to the theme. You could do a one and done. I mean, you're going to have to test it. We're usually one and done. I mean, usually we're done in one trade, but I've seen it go 2, maybe 3 trades. So if that first trade loses, the thing you need to find out is if you can get to positive with 1 or 2 more trades type of thing. A lot has to do with how long you want to trade. So one and done, you might not have as strong of a session win rate over a lot of sessions, but you still might do enough and well enough for that to be a good plan for you. Like you might get to your destination, it might take you a little longer to get there because you won't win quite as many sessions, but you'll probably contain your drawdown because obviously if you lose on the first trade, you could lose on the second, and worst case scenario, you could lose on the third. But that rarely happens, but it could and it will. So that'll give you a little bigger drawdown when that does happen. What you need to find out over the last 100 sessions, and I would recommend fast testing 100 to 120 sessions. You could pull the data for like the last 90 trading sessions with a momentum bar on TradeStation anyway. And you could quickly do a fast test counting winning, losing, and break-even sessions with 1 trade, 2 trades, 3 trades, even 4, and quickly count and then compare. And then if you see one that really jumps out at you, it's usually what happens is you discover right away which, if it's marginal, go with the one and done. If you're winning just a significant amount more with 2 or 3 trades, I think there's your answer. But ultimately, you're going to want to take that, whichever one you choose, and build your UTA spreadsheet and live through those trades and build that win-loss column. Go through the psychological feelings you do trade after trade, because that's how you're going to really tighten up your belief in it and see the results. Like really see it and feel each trade as you live through it again. That's all part of the process, right? So that's how I would do it if I were you. Because you could see, look, here's the trade today. If you did not adjust, first trade loses. So you would have quit with the losing session if you did not adjust. If you did adjust, you'd still be flat. The next trade wins. But then also, if you did, let's say you took the first trade and lost, by the time you get to the second trade, depending on how many positions you're trading. Maybe you're at break even or still a little down if you took profits at target one. Well, look at the next trade. Also a nice winner. And the next trade looking like it's probably going to win also. It's one tick away. And if you're in a third trade and you get to one tick to your target, you should be pushing your stop up to break even at that point anyway. So, I mean, just from today, the sniff test says more than one and done is probably better. So you're just going to have to do a little homework and figure it out. And you know what? That's what trade plan hacking is. That's what it is. That's what trade plan hacking is. That's why I coined that term and started that trade hacking club on Discord and the trade plan hacking club framework. Just held a masterclass on it this weekend. Still kind of coming down from it. It's really exciting. First time I've ever done anything like it. Kind of teamed up with my pal Romulus on that one. And in case you didn't hear the news, if you weren't on that training, we're about to kick off a new mastermind program in the next week or two. And it's all about developing trade plan, moving from the trees to above the forest. And John has said he's seen it take 5 or 6 trades to get positive, but yeah, I mean, everything is going to go through that at some point. That's always going to exist. But the analysis that you have to do is whether it's worth fighting through 5 or 6 trades during the rare occurrences that happens. Is that worth it in the end? Or is it worth trading less, take the losing session, and just preserve your capital without risking too much and affecting your trader psychology and all the stuff that could happen and all the time invested to keep trading, and take your loss, wait till tomorrow. You have to look at a lot of sessions to really know. One and done, you will not win as many sessions, but you won't lose as much either. And you could win plenty of sessions to still grow your account and hit that power of compounding and exponential curve. It just might take a little longer. But the positive side of that is less trades, smaller drawdowns, less wear and tear on you over time. That's a big deal, right? So one and done has its virtues for sure. You just got to prove that you're going to win more than you're going to lose, and you're going to grow your account. And then you just have to be patient, diligent, and disciplined. So there's factors to consider other than whether a trade or a session will win or lose, right? There's just other factors. You have to think it through. That's why we build our foundation the proper way, because otherwise you're just guessing. And if you're guessing, you'll never know the answer. And when you think you know the answer, you probably don't. Take a losing trade or losing session or 3 sessions in a row that don't do well, you end up throwing the baby out with the bathwater and chasing the next thing right before all the winners come pouring in. Chasing performance, that's the typical trap. So the cure to that is doing your homework and getting the big point of view, the vision, so you can see that forest. Fair enough? Hopefully you guys understand that. Any other questions before we hang this up? You can see there's another winner on soybeans there. All right then. Assuming, John, you're feeling better, hopefully you're good this week. I'm guessing you're doing tomorrow and Thursday. I'll be back on Wednesday. I hope everyone has a great day, and I'll see you next time. Hey, Steve, there is a link you can click. You don't need an invite from me. You just got to click the link, And if you look on any of these YouTube videos in the channel, in our Backpack Trader channel, within the description of all these videos, you'll find the link to join our Trade Hacking Club on Discord. So yeah, you just have to click on that and then you should be able to get in. All right, guys. Hasta la pasta.